Hey, everybody. Happy Friday. Happy Friday. Um, Thank you all for tuning in. This is going to be a relatively quick live, not too lengthy, but I do have some good information I wanted to share. Um, on Instagram, I don't know if you missed it, but I just went live. I was actually supposed to be doing a joint live with a special guest, but that has gotten rescheduled. But because you guys follow me, you're a part of the community, I want to go ahead and give you the game now like I plan to regardless. So in the description here, it actually says what this is all about. It's how do you become your own hard money lender? Okay, so we'll be diving all into that. Most of what I prepared was for a interactive experience, but I just wanted to give you the game for all of those who don't know. So again, my name's Elijah Markham, from New Jersey, graduated from the first degree granting HBCU, Lincoln University. And I'll be honest, at that time, I didn't quite know what it was that I wanted to do. I was always great at math. I was an mathlete, combined the two, and I got a degree in health science. Because I didn't quite know what I wanted to do, once I graduated with honors, I didn't really realize that my only option was to go back to more school. And that's really where my entrepreneurial spirit started bubbling up and showing itself, because there was no way it made sense to me to go back to school for 4 more years, incur 4 more years of debt before getting capped out at maybe $70,000. It just, the math didn't make sense. I would be paying those student loans back forever. So I took a chance on myself, hopped into sales. I was doing sales for a full exterior company, and I learned a lot about myself there. I remember a lot of people were even questioning if that's something I would be successful in, just because of how, I guess, antisocial I was. I was very secluded. I was a hermit. I was to myself. But after my stint with that, it was a capped opportunity, couldn't quite grow. I went into mortgages. And that's really where I met a lot of great people. And there was a quote that came to mind. Show me your friends and I'll show you your future. The people that I met when I was in mortgages, and even some that I met in my previous experience, opened my eyes to what finances really are. I know a handful of people all are able to retire, and some have already retired before the age of 30. There was one of my friends, he's actually a friend here on Facebook. He was able to quit. He came into the job just to quit. He invested into Bitcoin early, and before it became what it is now, and now he moved to North Carolina, hasn't worked since, living a great job, life. Another buddy of mine who gave me a lot of exposure. I'm really grateful for him, to different avenues in finance. He is able to retire, but still working just because that's what he wants to do, based off of Tesla. So a lot of my exposure was in the stock market, and that honestly was probably my first love. I became so successful in the stock market, I was able to actually retire myself for about a year. And that was until the pandemic happened. And I saw a side of the market I wasn't familiar with, and I honestly wasn't, comfortable with. Being in that market, I realized some of the things that I didn't like was the instability, the not knowing, and I've always heard people say, how come I can't invest with no risk of loss? And I was searching for that answer myself. I was joining masterminds, communities. I was actually invested $10,000 with Ian Dunlap's community before he adjusted the price. And I finally found how you can invest without any risk of loss. Okay. And that was huge for me, because my goal was to retire by the age of 40. I saw my friends do about 30. They started a little sooner than me. I gave myself an additional 10 years. But when I found this opportunity, it gave me everything that I was looking for. I was already always studying. I was already always researching, developing myself. And people were coming to me how are you doing this? Can you do this for me? And I can now be a resource where I can help myself and help other people. So I absolutely love it. So the other thing that I didn't like, when I was investing for a living, was I didn't have any peace of mind. I had zero peace of mind. I would be checking my accounts nonstop. And it was actually Warren Buffett who said it. You want to get into this industry, or you're really striving for peace. I know a lot of people say financial freedom, but what does that mean? Are you really financially free if you're staring at your phone 24/7? If you're on vacation and you're still looking at the accounts, that's not peace. That's not the freedom that comes with financial security. So this new strategy that I found provided that peace, not having to worry about risk of loss, not always checking my phone to see if my account is still up or down, And again, I want to share with you all that strategy and how you can use it to become your own hard money lender. Okay. I just wanted to share with you all, investing was my first love. It reminds me of high school. We all think we have that first love that's going to be our love forever. And then later on, you find something that's what actually love is supposed to be. So that is sort of my relationship between the stock market and this new strategy. Okay. So why do I bring up the stock market? A lot of people tell me, why go with your strategy? Yeah, your strategy is guaranteed, but I can get a higher rate of return somewhere else. Especially the stock market is one of the ones that always come up, because we probably all know at this point that the average rate of return in the stock market is 7%. So I want to ask you all, do you know what an average rate of return is? If you were to have to describe it to me, what is it? It's your profit, it's your loss, added together, and then divide that by the same number of years it took to get that. Why is that misleading? Whenever there's a loss involved, it never shows your actual profit or loss. What does that mean? Okay, question for you all. If you were to lose 50% in an account, how much would you need to make just to get back at that same value that you originally had? For all of those who said 50, that's wrong. It's actually 100%. Whatever you lose in your account, you need to double just to get back to even. All right. And for those of you who said 50 is a large number, in December, I was actually helping a lady. She lost 66% in her retirement account last year. So it's possible. Now, if those numbers didn't make sense, let's give you an example. You guys have $100,000 in your account. You lose 50% in a year. You have $50,000 left. For those of you who said you need to get 50% to break even, 50% of 50 is 25. 25 plus 50 is $75,000. Okay, you had a 50% loss one year, 50% gain, but you lost $25,000. But the average rate of return it's going to show on paper is 0. It says that you didn't gain or lose anything. That's not reflecting the $25,000 loss that you actually have in your account. So when people are coming up to me and saying that, oh, I can get a higher rate of return somewhere else, how do you mitigate the risk when you do take a loss? Yes, there might be another place where you can go ahead and get that 10, 15, 20% gain in a year. But what are you going to do when you take that loss? And how long is it going to take you to recuperate just to get back to where you were? So I like to give that example because, yes, you might be able to find higher rates of returns elsewhere, but you're not going to find the stability anywhere else. This product is liquid, okay? This product is protected from creditors and predators. If you were to get divorced, they can't touch it. If you were to get sued, you can't touch it. Why do you think everybody opens up an LLC? They want protection. This product offers that. It's tax-free. And it grows guaranteed. Tell me a product that can do all of these things and it produces an estate for you immediately. It does a lot of things. But out of all those things, the thing that I love the most about it is that it provides that peace of mind. It provides that stability for you. Okay. You never want to plan your financial future based on just rates of return. That's a losing game. Okay. Now, this product is a product that provides certainty in an uncertain world. Now, I don't know if any of you have been, just went black on social media or to the news, but if you guys haven't seen, we have no idea what's going on with the economy. We don't know if we're in a recession for months, if we're going into a recession. We don't know what's going on with interest rates. We have no idea if there's going to be another world war. We have no idea with digital currency. We have no idea what's happening. But this product, this strategy has been around for 300 plus years. So it survived Great Depressions. It survived recessions. It survived the 2000 dot-com bubble, the real estate crash. It's been actually deemed as one of the reasons our economy was able to rebound and bounce back successfully. If our nation is using this strategy to bounce back from financial catastrophe, don't you think it's a good idea if you implement something like this into your life? Okay. So I held out this strategy long enough. I'm going to go ahead and give you the name of it now. It's actually called Certified Cash Flow Life Insurance through a mutual company, more popularly known as infinite banking. Okay. Now that's become a coined phrase. It's actually a little bit flashy now on social media. And why I named it what I named it in the beginning, Certified Cash Flow Life Insurance through a mutual company, is because that is how you properly structure an infinite bank. I've seen so many people actually try to sell IULs as an infinite bank. I'm not going to go down too deep on that rabbit hole. If you guys want to see a video specifically on that, put some fire in the chat, put something in the comments. But IULs are sold based off of rate of return. It's all off of hypotheticals. There are no guarantees put in place with an IUL. And they say you have an unlimited cap and there's zero risk of loss. To a degree, that's true. You don't incur a typical loss in your account. But with IULs, there's actually a term insurance rider on there, and each year your cost of insurance goes up. So if there's a 0 year in the economy, like we're probably going to have negative growth the next couple of years, the cost of insurance is still going up. So your cash value is going to go down. So I've written a lot of these illustration wise, and I've seen a lot of them blow up. And that's not even including if you were to take some money out. So again, that's not what this video is about. Just want to let you guys know you need to be aware of what you're getting yourself into. All right. So what we came here to talk about is how can you use a properly structured infinite bank to become your own hard money lender. Again, I was supposed to have a guest on here. He is he's an icon in the making. It's actually his birthday week, and so we're going to reschedule. And we're going to bring him on. His name is Issac Grace. Go ahead and follow him if you don't. But he does wholesaling. He teaches wholesaling. He does fix and flips. He does buy and holds. He's crushing it in New Jersey. But regardless, how can you use this strategy? So with a properly structured infinite bank, there's two parts. You have the cash value and you have your death benefit. All right. The cash value is the banking portion. Okay. This is the part that's going to grow guaranteed. This is the part that's going to allow you to pull money out whenever you need it. Okay. And with the company that I highly recommend for this strategy, over the 120 years, it's been growing at 5.6%. So I want you to think of this as being your new checking account. Where can you find an account that gives you 5.6% every single year? Again, for 120 years, it's been given 5.6%. No losses, ever. Okay, typically in your checking account, you're getting 0.1%. So 0.01%, excuse me. But how can you use that as an alternative to a hard money lender? This is where I was going to have him, describe what a hard money lender actually is. But for those of you who don't know, Hard money lending is a way for you to get money to do a fix and flip. Okay, you find a dilapidated property, needs a lot of work, full rehab. You put a portion of the down payment in, they finance the rest of the down payment, and they finance the repair costs for you. Very strict qualifications with credit, typically 15 to 25% down payment. And they usually only give you max 12 months to get the property done. There's interest-only payments, so you're not paying down the principal in that time. So very, very strict. And for somebody who's trying to dive into it, it can be very stressful. It can be very stressful. So as an alternative to that, say you have the money in your infinite bank, you can pull that money out. You pull that money out, and because it's coming back as a loan, it's income tax free. Don't have to worry about the tax on that. You take the money out, no credit required. The payback periods are very, very flexible. You actually don't have to pay it back. We're going to talk about that in a second. And you can go ahead and rehab your property in however long it takes. And when you get that money from the profit, you pay yourself back instead of paying, and you pay yourself the interest. Okay, instead of paying the hard money lender that $300, $400, $500 a month, you're going to be paying yourself back. So you're going to recuperate the interest, and you're going to pay yourself back, and there's no credit check, and there's no time restrictions on you. It gives you a lot more freedom. Okay, let's take a pause before we keep talking. There's two portions to your policy: cash value, death benefit. Your cash value, let me ask you guys, if you were to take $100,000 out for the renovation of a home, and you only had $100,000 to start with, how much money do you still have in your account after you take out the $100,000? For those of you who said zero, that's incorrect. A properly structured infinite banking policy will never have your cash value higher than your death benefit. What does that mean? Your cash value is always going to be used as collateral. Okay, since it's used as collateral, it's still here. You're actually going to be using the insurance company's money in your death benefit. Okay, so let's give you some numbers. 100,000 here, you take 100,000 out to do the renovation of the home, and your death benefit is 150,000. So now your death benefit decreases to $50,000 while you're paying yourself back those interest payments, while you have the time freedom to go ahead and get the property done. And then once you recuperate the profit, your death benefit goes up. So that does a couple things, guys. Interest payments go back to you and not another company, not a bank, not the hard money lender. You have the time freedom. Your policy is going to be growing at $100,000, 5.6% every single year. It doesn't start back at zero. That's why my mastermind was stop fighting to be at zero. Your policy is going to keep going up. So you're using the dollar in two places, guys. Policy's growing here. You're using it somewhere else to get another asset. You're using it somewhere else to get another asset. And say if you want to hold that property, now you're getting equity. It's growing in the policy, and you're getting rent. That's using your dollar in three places. But neither here nor there. I just want to show you how you can become your own hard money lender using the strategy, guys. Okay? So again, this strategy gives you that peace because you know exactly where your policy is going to be in a couple of years. You know exactly how you can use it. If you don't pay it back, say during the renovation phase, God forbid you die, or God forbid the project doesn't work out, it goes south. When the policy is over, when you die and you just never pay it back, they're going to subtract 100,000 from your 150, and the rest goes to your beneficiary. So you have that protection still in place, guys. Whenever you get a loan from a bank, what happens if you don't pay? It goes into collections. Your family's going to have to pay it if you pass away. There's always a negative effect. And because this is a private policy, it will never show on your credit report. So it has no bearing on your credit score. It has no bearing on collections. God forbid something goes south. It has no bearing on you being able to borrow from somewhere else, like an actual bank, if you needed to as well. So there's so many, it's tax free. It's so many different things that come with this. All right. I will be saving this live. I understand there's a lot going on here. So if you guys are interested in this, please feel free to rewatch it. Now, the gentleman who's supposed to be hopping on, Issac Grace, he actually said, yeah, talk about, how you can become your own hard money lender and even tell people how they could be a hard money lender for someone else. This is what I'm talking about, guys. Show me your friends and I'll show you your future. Just being able to collaborate with people like that. I've been talking about this strategy maybe a year now, and I've never thought about using the policy to loan to someone else. So say the interest rates, like I said, start at 10%. You can create your own qualification. Somebody comes in under 600, you charge 20%. So you're going to be making 20% from the interest payments from the individual, while you're paying that 20% back into your policy. And once the policy is fully done from somebody else's work, now you're going to be able to go ahead and put that into your policy. And then you can also write a contract. There's so many different things that you can do to protect yourself if you lend it to someone else. But you can make sure that you get your money back. You can charge on the interest payments. You're becoming a bank. When we say infinite bank, we don't just say it lightly. You just need to have an advisor who's knowledgeable, who can sort of guide you in how you can use it. So you're making profit in so many different ways, and this is just one of the ways that you can use it in real estate. I have a friend, more of an associate, and right out of high school, he was able to get into real estate investing. When I found out about, this strategy, I reached out to him like, bro, you would love this. This is going to be perfect for you. And he said, I have one of those already. How do you think I was able to get into real estate investing out of high school? His parents set this up for him. His parents gave him an opportunity to never have to work a day in his life. So if you're not even thinking about this for yourself, you can think about it for someone close to you, a family member, because a friend of mine was able to use this strategy and never have to work a day in his life because his parents set it up for him. Okay? So, like I said, I just wanted to thank you all for hopping on a Friday. I do plan to do this again with Issac Grace. Like I said, he is just phenomenal at what he does, and he'll be able to give a lot more insight on the real estate portion of it. But it is his birthday weekend, so we have to reschedule. But again, I wanted to give you guys the game. I wanted to give you guys the game and just start opening your mind to the possibilities that are available to you. So I love you all. We're going to go ahead and do this again. And always remember, let's grow together.